Good afternoon, Zinger Nation. My name is Logan Ross, and this is Moon or Bust, your home for all things altcoins and DeFi. Live from Benzinga HQ in beautiful Detroit, Michigan. Today, we'll be talking about the crypto markets, giving you an update on the altcoins and EIP-1559. Then we'll be talking about the different types of stablecoins that we didn't get to on the last show. And finally, we will be interviewing the team behind the backed DeFi protocol. So get your popcorn, load up your MetaMask, and smash the like button because it's about to go down on Moon or Bust. I would like to welcome to the stage my two co-hosts, Brian Moir and Ryan McNamara. How are you guys doing today?
Good.
Doing well, as always, when Bitcoin's above the bull market support band.
Shoo.
Well, that is the perfect segue to our first segment where we'll be doing a market update. So let me pull up TradingView here for y'all. So at the time of recording, we have Bitcoin at $46,398, which is well above the bull market support band. So you can see these indicators here. This red line is the 20-week SMA, and this green line is the 21-week EMA. And we are above both of them. People argue about which one is really the bull market support band, so we just put them both up here for you. And as well, as long as we're above both of them, I think we're good to go. So we just broke up above it. We've seen this happen before, and we've also gotten rejected before. So it's not definitive until we can hold this line. So what I'm looking for personally is to come back down, hold this like maybe 43 level, 42 level, and then we will be cleared for takeoff. What are you guys looking for, Ryan?
Yeah, I mean, I'm looking for the same thing here. I mean, this might be our first red week in a while. We had, what is that, four green candles in a row, which is incredibly bullish. We have over a 50% increase in price since the lows. But yeah, I want to see that retest. I want to hold it as support, and then I think we're ready to send it off to new all-time highs, hopefully. Fingers crossed.
Fingers crossed. Brian, what do you think?
Yeah, I mean, I agree. We might see a little bit of a downturn. We might see 42 or something like that, but I think you're right. I think we're about to turn into some ATH action. I've never seen this indicator either. That's pretty interesting. Was that just saved from TradingView? Like someone made it, or did one of you guys?
No, it's saved on TradingView. A lot of people actually use this to define whether we're in a bull market or not. And Logan, if you want to go back to some historical prices, we can see where we've tested it before. You can see we were below it in the bear market. We came back above it, retested. And once we were able to hold it, that's when we really shot up basically in January there.
Yep.
We had like 3 or 4 weeks testing it as support. We didn't break under, and then we were able to shoot up much, much farther than what we were at.
Yep. And then when we held it here, it was good to go. So we'll look for that. We don't want to break back under. If we do, it's fine. But we'll look to hold it before we are cleared for the rest of the bull market. Okay. So should I pull up ETH now? What do you guys want to look at next?
Yeah, let's look at ETH.
All right. Sounds good.
I'm a little bit more bullish on ETH than I am Bitcoin, to be honest. In terms of seeing an ATH before we see one. We'll see it on Ethereum before we see it on Bitcoin is what I mean.
Which is interesting because usually we see Bitcoin lead the way, but Brian, I think you have a good point. We could see ETH hit a new all-time high before Bitcoin does. And solely based on the fundamentals with the NFT craze going on right now and everything else being built on Ethereum. I mean, I could see that happening as well.
Yeah, I think we're seeing that break off point now.
Yeah, I mean, we're close to 100% gains from the lows. We went down to about 1,700. We came up to almost 3,400.
Yeah, I bought 2 ETH at the all-time low, and then bought a bunch of NFTs and stuff. I went into different ones and then sold them, and I should have just held. I would have had a much better return than trying to go off the rails like I did.
Yeah, sometimes that's the best strategy. I want to toss it out to the chat. Let us know what crypto projects you guys are looking at this week. Drop some tickers in the chat, and we'll see if we have time to pull them up at the end. But real quick, before we go away from the market overview, I just want to pull up CoinMarketCap and talk about the alts that are ripping this morning. So we have, let's see, we have Binance up 5%. Dogecoin up 8%, Polkadot up 13%, Solana is up 27% right now.
Yeah,
Earlier
they're
this morning,
killing it
it
right
was
now.
up 40%. We have SBF Sam, the owner, the CEO of FTX. He has been heavily purchasing FTT and Solana, both with his huge war chest. So that's been driving the price up again. And we have an all-time high on Solana this morning. So
There's
that's pretty
NFT
exciting.
projects that are pushing it. The not Ape Yacht Club, but there's another, I think, ape-focused NFT that has been pushing Solana. Like it drived it about 12%, I think I saw. I'll try to find the name of it. But NFTs are really pushing on Solana.
I saw an interesting tweet about that, actually. It basically said, each smart contract blockchain is going to need its own metaverse with NFTs and everything else. Do you think that that's going to be the case, or do you think cross-chain bridges will make it possible where it's basically all one metaverse with multiple blockchains?
I think eventually we'll see that. I think at first we're going to need to each have their own individual kind of solution. And then we will see some, we'll see those cross-chain bridges. It just with the cross-chain, that adds another factor of error that can happen, and so
Poly network
can make it work. Yeah, I mean, there's a lot of things that can happen there. So having your own tried and true, what your company built or your project built, is much better than trying to build a bridge and use another system.
Mm-hmm. Yeah, it'll be interesting to see if companies like Solana, blockchains like Solana, will have their own NFT marketplaces that really boom like Ethereum's have, because that will drive a lot of people to Solana to be able to get in on some of those NFTs.
Yeah, and it looks like that the current price of Solana right now has pushed it into the top 10 market cap, which it was not in before. That's pretty neat.
For sure.
Oh, Degenerate Ape Academy.
That's the Solana project?
Yes.
Interesting. And I assume you use Solana to buy them then too.
I do not know. I just know of the project. I'm now looking into it. I think that is true.
Well, speaking of smart contract blockchains, I think it's time to talk a little bit more about EIP-1559. Go over a little overview. It's been 10 days since the London hard fork came about, and we've burnt a lot of ETH.
Let me pull up the bot right here on Twitter that shows each block and how much we've burnt. Actually, it definitely doesn't show each bot or block if this last one was from 11 hours ago. But here we can see 141 ETH burned in the last hour, 193 ETH burned in the last hour. And what's cool about this account is that it annualizes the burn as well. So if this level of burning were to continue for a whole year, this would be the annualized inflation rate. And during peak hours, some of the busiest hours, we see it going down to under 1%. And then sometimes we even have negative annualized deflationary yield.
Yeah, I mean, you see that annualized deflationary percent right there of negative 8.66%. I mean, that's kind of confirmation bias. You see there's 140 retweets on it, 550 likes. So I've seen some of these on Twitter. I don't follow this account. And I thought, oh, ETH's already deflationary. This is great. But really, it's just a small time frame, and you have to average it out over the entire time EIP-1559 has been out. And the longer it's out, the better estimate we'll get. So far, guys, we've burned 52,000 ETH, and we've issued 96,000. So, I mean, this sounds kind of like the ETH halvening to me. The inflation rate's gone down about half of what it was before EIP-1559. That being said, I mean, it's still inflationary, but at maybe around 2% now. That's really not bad whatsoever.
Yeah. And in the first half of this year, we saw Uniswap being the major ETH gas, like the biggest protocol that was burning the most ETH or using the most ETH in transaction fees, since it wasn't being burned at the time. But recently we've seen OpenSea, the NFT platform, flip that. And that's been the #1 most used protocol as far as volume goes on ETH lately. Another cool thing that I read about today. So if you guys aren't familiar with Glassnode, they do blockchain analytics, on-chain data reporting, and they have a Glassnode's alert Twitter account that just issued an alert this morning that says balance on exchanges for Ethereum has reached a 2-year low. So we haven't seen this low of supply on exchanges for 2 years. It's very bullish news. it's going to lead to a supply crisis and maybe a short squeeze, get some crazy price action going on. So we'll keep an eye on that as well. All right, that's it for our market and EIP-1559 update. If you enjoy that type of content, let us know by smashing the like button, drop a comment if you want us to do more of it. But now we're going to do a short little educational segment before the interview about the different types of stablecoins. Ryan, do you want to get this going for us?
Yeah, sure. So I thought we'd focus on Tether, USDC, and DAI since those are the most commonly used stable coins. If you use Binance, you might use BUSD, which is very similar to USDC. For me, I personally prefer to use USDC and DAI. There's been a lot of FUD around Tether because they do back their stablecoin with some debt, which is some questionable debt. It's not totally backed one-to-one with dollars in reserves. That used to be the case, or at least they used to say that was the case. But since then, they've printed billions and billions more of USDT. So I don't use them personally. USDC, in my opinion, is really good because Circle owns them. Coinbase works with them. They're about to be a public company via SPAC, so they're going to be audited. They're already audited, but they're going to be even more transparent once they're public. And same with DAI. It's open source code. It's made by MakerDAO. So I like them too. What do you guys think?
I personally use USDT because I mainly, if I'm doing day trading crypto, I mainly use KuCoin, and USDT is the one that has all the token pairs, and it's pretty widely used. But I do like USDC if I'm doing Coinbase Pro or something like that. That's just my opinion on which one personally I like. But I think it is pretty interesting what you said about USDC, because I think it's going to surpass USDT, and there's so much drama happening with USDT like throughout the years. So it's pretty interesting.
Yeah, I personally am on the same page as Ryan. I use USDC and DAI mostly. Let's talk about DAI for a second. This is an open source project, as Ryan mentioned. It's created by MakerDAO, which is one of the first DeFi projects back in like 2015, 2016. And this is not a one-to-one peg. It's actually backed by like a smart basket of different assets that roughly equivalent to or equal $1. So it will be more or less stable. It's actually pretty darn stable. And then you don't have to trust any centralized company to get that dollar peg. Yeah, so that makes it a favorite of the DeFi ecosystem. To try to get rid of any centralization at any point is like a choke point of vulnerability. So that's why a lot of people choose to use DAI, and that's why MakerDAO's token MKR has so much value. All right, do we miss anything?
I don't think so. To be frank, though, if Tether does end up crashing, I think a lot of the DeFi ecosystem is going to get really badly hurt. And I mean, a lot of other stablecoins could potentially lose their peg if that ever happens.
Yeah, but there are a lot of stuff that are coming out to prevent something like that happening. Like Paxos Standard, they also have a stable coin, and they use their own blockchain that has, a different basket of assets. I think you're right, though. I think if USDT does fail, I think we'll see some big hurt around the crypto community. Hopefully we can, there could be resolution to this. There could be solutions that maybe we aren't seeing now, or maybe that are in the works that will kind of come out soon, hopefully.
Yeah, it's kind of scary to have this lingering. But Coupon Boy wants to know in the chat, do you think that USDT will be supported by Coinbase again? So on the one hand, there's so much volume and so many trading pairs on other exchanges with USDT. But then again, there's USDC, which is creating a partnership with Coinbase. So they might be cannibalizing some of their own revenue by including USDT. Also, it's sus. So without some really definitive hardcore proof and like a full audit, full background, I don't see it happening. But yeah, what do you guys think?
No, because what you just said, Coinbase pretty much helped build USDC, so they're not going to use another company's stable coin because they have their own. There's no point.
It's like, do you think does Binance have USDC? I don't even know.
They have BUSD.
They use BUSD.
Other stable coins. I think
they do have a BEP-20 of USDT though, but that's just made because it was made. They mainly use BSUD. BSU. Yes.
Gotcha. Alrighty. Okay, so let's get on with it. Today we have the Backed protocol on with us today. We're going to be talking about what the protocol is and how you might want to use it when you're taking out loans on Aave or other DeFi platforms. So I would like to bring onto stream Max, Daniel, and Sam. How are you all doing today?
Doing well. Thanks.
Great. Thanks for having us.
Doing good.
Hey, well,
Yeah,
we're
thanks for
excited
coming on.
Yeah, thanks for coming on. We're excited to have you. So maybe one by one, could you each tell us a little bit about yourselves and your background in cryptocurrency?
Sure. I'm Sam. I first got into crypto, I think it was 2017, as part of my master thesis in computer science. My supervisor was quite into crypto, and he asked me to look into Ethereum mining pools, which back then I had no idea what they were really. And so that really got me first exposed to Ethereum, like looking at mining pools and mining pool reward schemes. And then I sort of stayed, at uni afterwards, doing a PhD, which I'm currently finishing up. Looking at various other bits. I think throughout my PhD, I sort of progressed from looking at, in the beginning, like really stuff on the mining side, and then gradually migrating over into more and more the protocol side of things, and ended up in DeFi. And did some work on liquidations a while ago with Daniel, and then last year started working on Backed.
Very cool.
I can go next. Hi, I'm Daniel. I've been in this space for, let's say, I've been quite more involved in the space for the past 3-4 years or so. I'm also finishing up my PhD with Sam. That's where we met. And I have been mostly working on a bit more low-level things like this smart contract analysis, and looking more at like the Ethereum virtual machine, how to exploit it, how we can kind of improve it, this sort of things. And and sometime around, I'd say maybe last year, January, something along these lines, with Sam, we decided to look a bit more into DeFi, to try to do a bit of research in this space. That's more or less how we kind of started this whole project, and we got to work together on this.
Cool. And Max?
Hey guys, my name is Max. So just like a lot of people, I got into crypto in 2017. Really had no idea what I was doing, but I saw that there was these assets that were moving up a lot in price. So I got interested, made a few lucky trades just based off luck. I kind of took a break during the bear market in like 2018. And then DeFi came, and I found things like Aave and Compound with, permissionless borrowing. And then for my own research, I found Backed, and I was like, hey, I totally use this tool myself. And then from there, I just reached out to Sam and Daniel and been working with them since about March of this year.
Very cool. So from a high level, in case there's anyone out there who doesn't know about Backed, could one of you tell us what the protocol is all about?
Yeah, sure. So I can take this one, and Daniel, if I miss anything, feel free to jump in. But so Backed is basically solving a problem that many borrowers in DeFi have. Because in DeFi, when you borrow crypto, you have to over-collateralize your loan, right? Mm-hmm. And in a way, that's great, because over-collateralization helps, lending protocols to protect themselves against the case that loans aren't being repaid, for instance. Mm-hmm. And you have this great liquidation mechanism. But at the same time, if you over-collateralize your loan, there's a lot of collateral just sitting there, and you can't do anything with it. And in DeFi, there are a lot of opportunities where you can put that that capital to work. Mm-hmm. But of course, if you reduce your collateral, then you have a higher risk of potentially getting liquidated, especially if markets are volatile. And so what we wanted to do with Backed, what Backed essentially does, is it allows you to reduce your collateral on, for instance, lending protocols like Compound or Aave, and deposit those funds into Backed, then register your position on Compound or Aave, and you can essentially use your Backed deposits as backup collateral. So Backed will put these funds to work, similar to traditional yield farms, but the difference being that as soon as your funds are actually needed to protect you from getting liquidated, it'll be automatically shifted over to the protocol where they're needed. So it's this. So I guess in a sentence to describe Bakkt would be a traditional yield farming protocol with a utility layer over it that actually allows you to use your Bakkt LP tokens to do more things like collateral shifts and
Very cool. So you're working with Aave and Compound right now. Do you have any plans to add any different protocols, or are these the two big ones that you're good with for a while?
So since you just mentioned it, that's probably a good timing. But so MakerDAO and DAI also uses over-collateralization to secure their protocol and make sure that the protocol will not default. So this is the next protocol we do have in mind to integrate, so to be able to also cover this collateral position on MakerDAO. And we're also talking to a few other protocols, and we will see basically what we decide to integrate. But the next step is definitely MakerDAO and DAI.
Very cool.
So to move these funds around, and I know you guys are starting with ETH and DAI, and I think maybe, is it one other stable coin? Is it USDC?
Yeah,
yes.
Okay, so what you do is you put it into a liquidity pool. You're staking it essentially in the liquidity pool, and unlike a DEX where you have two assets, it's only a single asset liquidity pool. So say I put some ETH in the liquidity pool. What happens next with that? Like, what parameters do I set, and how does it actually work once my funds are in the liquidity pool?
So I can take this one. So basically, the user will register a position, which says that, for example, I want to protect this position on, say, Aave, for the sake of example. And I want that if ever my position has health factor, so basically the collateral to debt ratio goes under some value. So let's say 1 being the exact point where one would get liquidated. Let's say if it gets under 1.2, I want to top up, say, 10,000 DAI. And I can do this, let's say, up to consuming my budget of 50,000. So it can happen multiple times with a single position too. And then we have this keeper, so this off-chain bots that will be open source. So we'll provide a first open source implementation and run our own keeper, but anybody will be able to run this and also to implement their own if they want to improve on that. And so these keepers will listen for this, and as soon as one of these positions will fall under this threshold, it will execute the action, and the funds will be shifted from Bakkt to actually top up the position on, for example, Aave, for example.
Got it. So if your funds aren't being used to top up to add some collateral to these loans, then you can actually use them to yield farm and earn interest on your cryptocurrency. So what products are you working with? How are you actually earning this yield when you're not using your funds to top up your loan?
Yeah, that's a good question. So so when you deposit, right, you get Bakkt LP tokens, and you don't have to be, first of all, a borrower to use Bakkt, right? You can also just use it to yield farm, because then you will essentially get profits from yield farming strategies, Bakkt rewards, and the fees that people pay for the liquidity to be shifted to their protocol. And the strategies, so these strategies can of course change over time. Currently, I mean, when we launch, it'll be one strategy per pool. So the flow is really, you deposit, your funds will get deposited, and then they'll get allocated by the pool to the strategy that will, do whatever, how it has been designed. And we've decided to start out with strategies solely using convex and curve. So, I mean, I'm not sure if, in case people don't watching this are not familiar with convex, for instance. I mean, convex is really helping people to achieve their maximum boost by using curve and not having to lock curve tokens directly. So we're essentially channeling liquidity into convex, and convex then channels it into curve. And that's what the initial strategies are based on.
Okay, so each liquidity pool will have its own yield farming strategy. How many different liquidity pools do you guys plan on having at launch?
So at launch, there will be three pools. The plan is to launch with a pool for DAI, for USDC, and ETH. And then it's of course extremely easy to add pools for more assets, and I think it's really just for us at this point. I guess important to focus on what we think is a good set of pools at launch time, and then the community should decide what they think is actually what's needed, and we can vote on adding new assets, new pools. Potentially can extend this in future versions, having pools with multiple assets. I mean, there's quite a lot of room here for where this can be taken.
And that's a really good segue into my next question about the backed token itself. So you guys mentioned that that's going to be used for protocol governance, which is pretty similar to Uniswap's Uni token. Will it have any other use cases?
Yes. So I mean, governance is of course the main intention, right? I mean, having this token to give back the control over the protocol, or give the control of the protocol to the users. And the main, I guess, use case, I mean, it will entitle token holders to direct cash flows or earnings that the protocol generates, right? So there are quite a few places where backed generates fees, whether it's sort of the fees that are charged on the strategy profits, the small fees, or the fees that are charged on collateral top-ups. There's always a small fee that goes to the backed token holders.
So is the backed token, will that be launching at the exact same time as the protocol?
If anyone else wants to jump in at one point, I feel like I can
no problem. But it will be a bit after the main launch. So the plan for now is to do a first mainnet launch with a cap on the liquidity in the protocol. So some sort of like public beta versions that we are planning to launch early next month. And during this time, because we'll have also some liquidity mining at the beginning, we will not launch the backed token yet. And as soon as the protocol goes fully live, which should be sometime between early and mid-October, we will also launch the backed token.
Okay, I got it. So have you guys sold any tokens yet in pre-sale rounds, seed rounds, anything like that? Or will these tokens just be coming out as basically as like a liquidity incentive for users?
So we did raise a fairly small pre-seed round to get the project going. And this is at this point pretty much all that we sold. And all this plus the tokens that will be allocated to the team and so on are vested and will start to invest when we actually launch the protocol.
Okay, cool.
Yes. Yeah.
So,
just I guess jumping in on that, it's probably worth mentioning that the majority of the tokens will be distributed through like liquidity mining schemes to the users, and this is both liquidity providers as well as keepers. So the bots.
Got it. So is there a set like incentive schedule yet? Because I know a lot of these protocols to incentivize users to hop on right away. Maybe they'll do like the first 6 months is a certain amount, and then the next year or two is a smaller amount.
Yeah. So we do have an inflation schedule that essentially sort of tampers off over time. So in the beginning, the first year will be, I should say, probably a bit more of an aggressive token release schedule, and specifically the really early period of the protocol. That's where we're hoping to attract quite a lot of liquidity.
I think I just pulled it up right here, Ryan, so you can see.
Yeah.
Here's the inflation schedule right there.
Exactly. Yeah.
Well, you guys just mentioned the keepers, so it'd be cool to kind of go into that since it's pretty unfeasible, since it's not really feasible to watch and monitor your data on chain. You guys have to use those. Can you like go into more detail about what a keeper is and what it does or how it works?
Of course. Yeah. So basically a keeper, it will be a small off-chain program. Right now we're implementing this in Go. It monitors basically all the events emitted by Backed to register keep track of all the positions that are registered in there, and it also it's connected directly to an Ethereum node to do this, and then it will query the health factor of all the positions that it's keeping track of, and this will be done every time a new block is emitted, and it will also check all these health factors with whatever position has been registered. And if it finds out that one of the positions has gone below its target health factors, then it will execute the top up by setting a transaction. And so this can be done by basically anyone. The only assumption, the only thing that needs to happen is that the threshold is actually reached, because that will be checked in the contract on chain. And so we're also planning to reimburse fees, so the gas fees for the keepers. So when a keeper will try to top up a position, the gas fees will be reimbursed to the keeper when executing the top up. So that basically for a keeper, it's almost risk free to run, and he will get some small fee from whatever amount he did top up through this operation.
So that gas fee reimbursement, does that just come from some of the fees in the pool?
It comes, yes, from funds, not from the pool directly, from the funds that the user has locked to be able to top up his position. Okay. So it will be basically deducted from this amount.
All right, so the user pays the gas fee to top up his position. That makes sense.
Yes, indeed.
Well, on the top ups, do they work both ways? If my loan on Aave becomes over collateralized, will I be able to get like more so I can do more yield farming, or how would that work?
So yeah, that's a very good question. And so for now, it will only be one way, but that does. This is definitely something we are planning to support, and it is basically one of the things a bit longer term that we want to achieve is to open a bit more use cases than just collateral top up or moving collateral around. So basically, the kind of, let's say, longer term goal is to have this sort of reactive liquidity pool where like funds can come in and out of the pool to do not only collateral top ups, like this will be the case for our very first release, but also be able to do all sorts of things with these funds that are currently used to earn yield. For example, like a simple use case could be to place limit orders on some other protocol, for example. So that's something that we have in mind for both. So this kind of moving back collateral to the liquidity pool, but also to open some use cases to much more diverse users. Gotcha. And that makes sense. And the more, data you guys have to see like which way to go with it, the better you can, implement, for everyone's options or choice or whatever they want to do. I like that plan. Do you guys plan to launch a DAO this year? And I think you guys are planning to launch a DAO this year. What exactly would the DAO be doing? What do you guys have plans for it?
Yeah. So the plan is definitely to launch a DAO. We haven't committed on exact timescales yet. This year there's of course a lot launching. The protocol and the tokenomics side, of course, as well. And then the next thing will be the governance. But of course, in terms of what the DAO would be doing, there's quite a lot in terms of parameterization, first of all, in the protocol that the DAO should decide on, whether it's fees, whether it's required reserve ratios, because there are situations where, you may want, depending on how complex the yield farming strategy gets, it might not be that easy to free all the funds when you need them. So you might want to have required reserves to be actually able to top up all the positions that are when the time to top up comes. So these are just parameters that we'll set, of course, in the beginning, and we'll set once we launch, keep updated. But that's for instance one responsibility the DAO should take, and also the whole, just steering the protocol in the long run, right? As Daniel mentioned, we have really a lot of plans with the future of Backed. In the beginning, it sounds like there's this focus on collateral top-ups, which is true, but it's really more this longer vision of, creating a super powerful yield farming protocol with various other, like this utility layer where you can use your funds for various other actions, like, collateral top-ups, earning yield while your limit order is not executed, potentially using it on curve pools and protect yourself against imbalances. There are various applications you can apply this to, or use cases, and this is where the DAO would come in, and they would have to also decide on which direction we're really pursuing.
Gotcha. So you guys are kind of wanting to do like a mix of the best of all these worlds and just kind of make it into one house, which that is awesome. I like the how you laid out the grand scheme, because it is a lot more than what you guys just said. It's pretty much taking all the best pieces from all these great aggregators and protocols and putting it all into back. That's awesome.
Yeah, it's really it's really the plan. I know the term sort of capital efficiency is used quite inflationary in DeFi, but I think that's really something we're after, right? I mean, whether it's collateral efficiency or even if you look at limit orders, right? If you place a limit order and your funds are just sitting there, you could earn interest on your funds while your limit order is not filled, and I think this is where we really want to try to get in. And just tackle all these use cases where you earn really until your action needs to be executed, whether it's collateral top-ups or limit order execution, whatever.
So have you given thought to how one can go about joining the DAO? Because I, for one, would be interested. Will you need backed tokens, or how do you actually become part of the DAO once that launches?
Yeah, we'll scoop some up right now.
Yeah. So I mean, we'll have a liquidity mining scheme, right? People who will use the protocol, whether it's LPs or keepers, will get back tokens, and they can be used to then participate in the DAO. We're sort of finalizing internally the design exactly of how that will look, so I can't just disclose too much yet.
Understandable,
but it's it should be. I mean, it's very straightforward to participate, and anyone can participate, really. Any backed token holder can participate, and we're hoping many will. I mean, please do. It's
Brian, you got one more question?
Oh, sorry, my fault. What upgrades will Back V2 have once it's launched?
So upgrade-wise, I think the main thing is that we will move from really this collateral top-up only to adding way more functionalities in terms of how the liquidity can move around. That's really the main thing we want to focus on for the next iteration. So that will be already quite a bit of work. We are not sure entirely yet which different actions we will include, because we want to first talk to our potential users, see what people actually need and would be ready to use. But we will basically shortlist a few of these different use cases and include them in the next in our next release.
Gotcha.
Very cool. So let's talk about competition for a second. Who else is innovating in this space? What would stop Aave from just implementing this themselves? Do you guys see yourself in a race? I know you have a partnership with Aave, so maybe there's some sort of agreement that they won't compete. Could you talk to us about that?
Of course. So there are a few different, let's say, points where we need to look at this competition. So first, if it's only really the collateral top-up part, one thing that has been very slowly happening, it's still only with a few protocols, is that the collateral, so basically the collateral tokens, for example, for Compound C tokens or for Aave's A tokens, can be used in some other protocols to do some sort of actions, and vice versa. Also, some yield farming LP tokens can be used as collateral. I think Cream Finance had something with Yearn, if I remember, to do so. So that solves at least this collateral over collateralization problem. But it is still really at this point only implemented for a few pools, for a few tokens, very ad hoc, and I don't see this really becoming usable in every single protocol. So I think it's probably not really general enough yet to kind of be a real threat, at least for back. I think there's still more than enough collaterals and more than enough markets that need to be covered, and that back will help to do so. And then there are a few other protocols. I forgot if it was Keeper DAO or Keeper. These sort of Keeper networks. I forgot the exact name, but where people can get this sort of off-chain keepers. And if someone just wanted to top up its collateral using this, he could register, I think, something on this Keeper network and do so. But I don't think that these implement any sort of yield farming part. So this is also kind of missing a piece of the puzzle. And finally, there are also like a few others, like DeFi Saver, I think also does this sort of a bit collateral management. But again, I don't think they really have, it's more like just so moving things around without having this core like liquidity pool with like different strategies and so on to farm. So at least like there are many protocols that have some pieces of what we're trying to achieve, but I don't really think, as far as I know, that there is anything around that really like kind of integrates all this in a simple to use protocol where people can just really get the job done and also earn yield on their liquidity.
Very cool.
Yeah, just to add on to that real quick, there are other protocols like DeFi Saver, one called Kono, that do like debt rebalancing. But from our perspective, what we're doing that's different is tying in the yield farming to that rebalancing or collateral top-up aspect. So yeah, you can use those other protocols, but if you want to put your idle assets to work like Bakkt is doing, from our perspective, this is the only option we've seen in the market.
Awesome. Okay, so do you guys have plans to implement on any side chains or layer 2s?
Well, so we do have this like on the longer term, let's say, and I think there's quite a lot of interesting things that can be done there, but it is, at least this will be after our second release. So first we want to finish this mainnet launch with this top up as the main kind of use case, and we want to a bit broader scope. And after we're done with this and this is working well on mainnet, then we are planning to start looking a bit more and see at that point what is kind of the most promising avenue for this expansion. But this will be a bit in the longer term once we expand also the team a bit, because it will be quite a bit of work to get there.
Awesome. So stepping back from Bakkt, let's talk about Ethereum versus the Ethereum competitors. Why'd you guys go for Ethereum versus one of the others, and what do you think long term we'll see as the dominant blockchain?
Well, at least for the reason of choosing Ethereum, that's very simple. So we, when we started this, we had like mainly this liquidation protection use case in mind, and it's after that we kind of tried to broaden the scope. But so we did we wrote a paper last year about this liquidation with Sam, and we analyzed like all the liquidations that were happening, and a bit like how all these ecosystems were working, and clearly like in terms of volume of liquidations and so on, Ethereum is far ahead of the competition, and so it just made more sense to do so. For the future, well, it's always a bit hard to predict, hard to say. I mean, I don't see Ethereum going anywhere anytime soon, so I'm quite confident this will stay very useful for a long period. But then I'm pretty sure that the Ethereum compatible chains will probably also see a lot of traction, as we've seen like recently with BSC and so on. So if that is the case, and we see that there's a lot of potential, we might try to add support at some point. But for now, it is really, we don't have any concrete plans to do so.
Very cool. Sam, you have any thoughts on that? Want to add anything?
Yeah, no, I think I definitely agree with what Daniel said. I also think, the liquidation element is one reason, of course, why we definitely want to stick with Ethereum for now. But also, if you just look at sort of over the past year, how DeFi has grown on Ethereum and all the applications that have evolved, or the protocols that have been built, right? Curve, being a year old, it's crazy. And so I think that just sort of validates also our plans of being able to support more use cases beyond collateral top-ups, right? Because there's so much more you can do, and as these protocols become more complex, that evolve, it's great for us because we can really plug in and make sure that funds are used as efficiently as they can be across various protocols. So really this element, or this notion of reactive liquidity that we're trying to implement in the ecosystem, I think it's just going to work better and better as the whole application space develops further.
It's kind of like the idea of DeFi Legos, right? I love how everything's so like collaborative in the space and everything builds off of each other. I think it's super cool. And I think that that's just going to drive innovation even farther.
Exactly. Yeah.
Very cool. Appreciate the insights. Well, guys, thank you so much for coming on. It was really a pleasure having you guys today. If there's any shout outs you want to give or places that people can go to find out more and stay up to date with the project, the floor is yours.
Sure, yeah. Thanks, guys. We are at Backed Fund, BACKDFUND on Twitter, and our website is just backed.fund. So feel free to check that out. We're on Discord as well. And yeah, community is growing, so it'd be awesome to have you guys join in.
Yeah, and of course, as Max said, the community is growing. We're super open to community input, right? So whether it's on Telegram or on Discord, reach out to us. There's so much to do. Whether it's on the strategy side, whether it's on translating websites. I mean, there's really a lot, and we're really going to release a lot of cool tech and some sweet products over the coming months. So if I can only hope that many people will get involved in the back community. We have a lot planned.
Awesome. We're excited. We'll have to have you guys back on in the future. But for now, that's all the time we have. So thank you guys so much for joining us, and we'll see you later.
Awesome.
Thanks for having us.
Thanks, guys.
Thank you guys.
Bye, guys.
Thank you, guys.
Thanks.
Alrighty, we hope you guys enjoyed that interview. If you do enjoy that more educational, that deep computer science type content, let us know by smashing the like button right now. Drop a comment. I see Gabriel is excited. He enjoyed that. So now I think we should probably do a little bit of Moon or Bust. What do you guys think?
Let's do it. Dirk wants to know about Matic. Can we pull up Matic? I totally forgot about that hype intro.
Oh,
Silly me.
How
Always.
did you forget about the intro, Ryan?
Because
You
we
had
never
one
do
job,
Lunar Bust
man.
anymore.
It's
It
the
makes me
MLB
sad.
staple.
All right,
what we
let's
do.
start off today with Polygon. Polygon has been ripping this morning.
Moon.
We're up nearly 6%. Let's see. Let's zoom in a little bit here to the 7-day. It's just a straight ramp going up. We're back at $1.50. Let's see here. So if you guys don't know, Polygon is a side chain. It has its own consensus algorithm, but it deposits its information. It rolls up the information that it processes back onto the Ethereum mainnet. So while it does have its own security, it is rooted in Ethereum, and all the transactions will go on Ethereum as well. It saw a lot of popularity in the first half of this year. After ETH gas fees got really bad, a bunch of people started yield farming on Polygon instead. Ryan, what do you think about the side chain?
It's all right. And I think when ETH gas fees get higher, Polygon will do better. I think it's more of a short-term play, though, because ETH2 will hopefully be launching sometime eventually within the next year to 10 years. But I do have a couple gripes with Polygon. So first of all, it has its own token, and I think that just makes the entire user experience a little bit harder than something else like Arbitrum or Optimism. I think there are other layer 2 scaling solutions out there that might be better alternatives. However, they don't have their own token, so you can't invest in them. And then the other thing, like I said, with ETH2 coming out, that's going to greatly reduce transaction fees. And then the question is, will Polygon even matter once ETH2 comes out? It's kind of unclear at this point. Do you guys think that Polygon will find its place once ETH2 comes out?
Yeah, I think that Polygon has a lot more stuff to kind of give and keep on giving, even with ETH 2.0. It's one of the main side chains that's utilized by a whole lot of different projects. And a lot of projects have an Ethereum version and one that is on Polygon, which I think is pretty cool. We can go into a bunch of differences and a bunch of like the technical side of things with what Polygon does and what they are. But I think that they have spearheaded the roll-ups. They spearhead layer 2. And I think that they'll even become their own, entity when ETH 2.0 comes out, because it's kind of that right now technically is the solution is Polygon. but whenever they're side by side, they're going to be their own entities. So I think we're going to see Polygon stay. There's a lot of projects that are on Polygon that you wouldn't even realize that they're on Polygon, and they're not even on Ethereum. Well, fully on Ethereum, you can still bridge and use ERC20 tokens, that stuff. But I think we're going to see them just grow and grow and grow.
That's crazy.
Well,
65,000 transactions.
Let me give you another counterpoint, Brian.
Mm-hmm.
Polygon is right now offering incentives on these different platforms like Aave, where you can earn extra interest in Matic token, earn Matic for basically doing the same thing you would on Ethereum's layer 1 mainnet. Why do they need to provide these incentives? If ETH gas fees are high right now, then shouldn't that be an incentive enough to use it? Basically, what I'm getting at here is once they stop offering incentives and ETH merges to ETH2, then gas fees will go down greatly. It's basically reducing both incentives to use Polygon. One is the gas fees, the transaction fees that you won't be saving on, and then two is the extra incentives, the extra APR you're getting from actually using the Polygon network.
Mm-hmm. I mean, I can't. I don't really know how to answer that, because it would be a personal preference at that point, because you're like, well, what's the point in staking and doing all that if they're going to be matched? But that's why I think that it's going to become its own entity. I mean, Matic is still an ERC20 token.
Yeah.
So it's not its own native token on its own native blockchain, but technically Polygon isn't its own native blockchain. It's a fork and a advancement. It's kind of cloudy. I mean, you got a point though. I don't really have an argument. Because
like Daniel said, though, I mean, look at Curve a year ago. Look at Sushi after it forked from Uniswap. There's been rapid innovation over the past 12 months, and I don't think that's stopping. I mean, who knows what Polygon will look like in a year from now? It could have dozens of other use cases. Who really knows? So, I mean, we'll see what happens.
Yeah,
and AO Finance says Cuban likes Polygon. Yeah, he also likes Dogecoin. So, I mean.
Well, he does not shill Dogecoin. He made that very clear over the weekend.
After shilling Dogecoin.
He doesn't shill it. He just chills it. I think that with Polygon's, their user base already, their fans, their community in general, they're the 16th biggest cryptocurrency by market cap. It's almost $10 billion. They have enough money to do whatever the heck they want and innovate however they choose. I saw they're implementing their own layer 2 as well, so they won't be just a side chain. So they'll be competitive in that space as well. Ryan, I definitely like your point about other side chains and layer 2s becoming irrelevant once ETH scales itself and has its own side chains. But I think that as demand for blockchains just continues to grow, the more space we have, the better. So it might not be might not see the volume that it did this year pre-ETH2, but it will probably stick around in some capacity. I think as an investment trying to make some money, the Matic right now at 150 is going to be a good deal in a few months from now, but maybe not in 10, 20 years. We'll have to see. I'm going to give this one a moon. I have it in my portfolio.
One last point to it is, if you go on awesomepolygon.com, you can see, just like DApp Radar or DApp.com, you can see all of the applications, the dApps, DeFi, NFT, everything that is on Polygon, and the list is very, very long. Now, some of these too are its own. Here's one thing that I would like to clear up too. Everyone thought that Polygon's the thing that got hacked. Polygon was not. Poly Network got the $600 million hack. Just to clear that up, and we'll just let that be. But there's a lot of things that are on Matic or on Polygon by itself, not even on Ethereum. So it'll grow, it'll go, it'll become something. But you're right, it's speculative, and we'll have to just see. I personally think it's a moon. I personally hold it in my portfolio, and it's one of the longest holds I've had so far. So I'm really, really bullish on it. I like it a lot. But what you said, Ryan, is all right,
Ryan, we're out of time. Is it a moon or bust from you?
It's a bust from me.
Oh shit, that's controversial right there.
It's the opportunity cost to invest in other cryptos.
Go tell Ryan he's dumb on Twitter. If not,
follow me first.
Yeah.
Follow me, then
Come
comment
back
down.
on Wednesday. We have another great. Actually, no, there's no show on Wednesday. We
No show on
we
Wednesday.
just found out this morning. No show on Wednesday, but we'll be back on Friday. I can't remember who the guest is, but stay tuned to Benzinga's YouTube channel. We have pre-market prep at the close right now. So I will toss it over to Spencer and the rest of the team. But thanks for tuning in to Moon or Bust, your home for all things altcoins and DeFi. We will see you on Friday. Peace.